Okay, so this is part two of the Chinese stocks buy, hold or sell. If you haven't seen part one, then pause this video now and go and check out part one, and I'll be here waiting for you for part two. Okay, another one would be that people always, all the time say, no, you can't invest in China, they're a communist country, you can't invest in communist country, no chance. And just for that reason alone, basically, that people won't invest in Chinese stocks or Chinese companies. And when we actually look at it, and I think the West has a very slanted view on what happens in China. Um, I don't really think they're that communist. They're more of a mix of communist and capitalist. In the last 20 odd years, they've are a lot more capitalist, and they've really did really well out of that. They've really become like the number two, almost the equal number one sort of superpower of industry and finance um, out there by opening their doors and letting the West sort of trade and come in. Um, they are very controlling, and have a different approach to Western type governments where they like to um, go from the top down, where sort of in the West we sort of go from the bottom up, sort of way we govern. They like to make rules, and when you look and research and talk to look at how the Chinese see things, they see it completely differently. They put trust in their leaders to do the right thing, where in the West we try and vote for someone who we like to try and do the right thing, and that hasn't always worked out that well, where they completely trust for them to make the right decisions. Um, and some of the decisions, as far as like the crackdowns they've recently done on the tech industry and other industries, when you actually look into some of the stuff that they did, it actually makes sense. Like the controls on monopolistic practices, that they wanted to stop that of companies, um, wanted to give it a fair playing field for everyone, so they stopped that. As far as like where they controlled the amount of time children have on gaming, they've really been strict on that and said, look, we don't want the children being on gaming all day. They're only allowing a certain amount of hours a week. Um, Stuff like that, which obviously that's affected sort of Tencent because obviously they're a big gaming industry, gaming provider. Where in the West, the government sort of say, it's your children, you make the choice, you parent them, you decide. Where they're deciding and saying this is what's going to happen. So it's a slightly different way of looking at it. And like I say, their long-term plan and their long-term future is to be the number one, to overtake the US for trade, for making things, for industry, just to be the financial center of the world. Their plan, long term, if you really research and look into it, is at the minute the US dollar is the number one reserve currency. They wish their currency to bypass America so that the world will see the Chinese money as the number one currency in the world, as the number one reserve currency. They're really, really pushing out and having a big influence around the world with trade and expanding and giving countries loans to build things and stuff like that. So I would suggest you really look into it and do some proper research and not just listen to everything on the media about this is communist and that's it. I think other fears as well why people have been dumping the stock are fears of sanctions in the future against China, with the whole Taiwan situation, as Taiwan sees it as China sees Taiwan as part of the bigger China from historical in the back. And we look in history, they see it as that is just part of them. Obviously, Taiwan themselves don't feel like they're independent, so there's a friction point there. There's also a friction point with definitely the US down there. The US have always had a massive, strong military presence as well down in sort of the Asia area and in the China Seas area and stuff like that. But China now is also a big superpower military as well. So there's a lot of tension building there, and there's a lot of friction with how China's going to obviously get Taiwan back into its orbit. There's also the tension with the things going on with Russia. At the minute, China's sort of sitting on the fence of which way they go with the whole Russia and Ukraine situation. They obviously trade a lot with Russia and with the rest of the world, so it's a balancing act for them, and they're still not sure which side to come down on yet. And obviously, again, there's been threats from obviously the US as well that if they favour and send arms to help Russia, then there'll be sanctions against China. So there's a lot of stuff there. I can't. I think the play will be for China. It's my own personal view that I don't think they would risk. They want to be the number one financial powerhouse in the world and the one big trader in the world, etc. So I'm not sure they're going to risk all what they've built up in the last 20 years to sort of throw it away or put it back quite seriously by looking bad to the rest of the world, then who the rest of the world will want to put sanctions on, etc. And at the minute, obviously, a lot of short-term negativity with the stocks plummeting is China's got quite a big COVID sort of spread again at the moment, and that's caused a lot of panic. China's got a very strict zero policy on outbreaks of COVID. They don't want any. So as soon as cases come down, they just shut places down really, really quickly. They've been recently shutting down whole towns and cities again, just massive lockdowns. And obviously that affects, because obviously so many things are made and produced in China, and that obviously affects the way China's growth and how they trade when nothing's happening, nothing's being built, and so they can't sell stuff to the rest of the world, etc. And made. So that's also had a negative effect recently. Okay, so do we buy, do we hold, or do we sell? Now, we've looked at the fundamentals of the businesses, obviously good Chinese stocks like Alibaba, Tencent, etc. Obviously, there's a lot of rubbish stocks out there, like there is US, UK stocks. There's a lot of rubbish Chinese stocks that I would not invest in. But Alibaba, Tencent, you could probably bring JD.com into that as well. Good, strong companies. Their fundamentals are excellent. They're still really, really good. They're still healthy. So that's okay. We've talked about some of the fears and why people are selling. We've talked about the delisting fears. I give my opinion on that as a step back in a bit more of a rational approach. I've thought about this, and that's my opinion on the delisting situation, that I don't really believe that's going to happen. Not with the major stocks. We've talked about the communist country situation and how a lot of what's sort of put out there about China being communist is a bit mythical, and it's not all completely true, and you need to really look more into what the goals of the Chinese government are and how they want to open and make these and help push these companies to be world leaders. We've talked about the sanctions that possibly could come with China and how that would affect how things happen and how they want to be seen and looked upon on the world stage. And I don't think they want to damage that image. And if anything, they want to make that stronger, I believe, and have more of an influence in the world. So again, I'm not sure a lot of all that's true. So we've looked at a lot of these situations, and now we need to look at, so what are these companies really worth? Obviously, the stock has plummeted. Alibaba, example, has plummeted. Tencent has plummeted. And when I revalue, I go back to these stocks that I'm invested in and revalue what they're sort of worth, basically. And if we look at, say, Alibaba, currently trading at $108, it's really, really cheap, in my opinion. And you look at, okay, these companies are still good companies. There's no rational reason why these stocks have just plummeted so much. You look on Yahoo Finance, and there's a lot of analysts there look at the stock, and there are a lot of people there recommending it as a buy. And you look at their average price that Alibaba should be, and that's $186. I personally see it $200. That's just my opinion of the stock. So I see a stock that's worth $186, $200, selling for $108. It's just ridiculous, really, when it's irrational behaviour that is making the stock that low. And to me, it's undervalued. Tencent, we look at Tencent, it's currently trading at $5, and they're averaging $12.46, which again, that's come from obviously analysts on Yahoo Finance. Again, it's showing that even with their opinion, it's undervalued. We talked about earlier in the videos about there's big investment companies invested in these companies. We talked about Ray Dalio, Charlie Munger, Goldman Sachs, Bailey Gifford, BlackRock, Vanguard have all got big investments in these two stocks alone. And this is by no means recommended advice that you should go and buy these stocks. I already hold quite big positions in my portfolio in these stocks. In the last few weeks, I bought little bits of Alibaba and Tencent. I also hold a China ETF in my personal ISA that I just regularly pay into every month, so I've been benefiting from the low prices. Um, but obviously, like you've seen my trading 212 portfolio of it being down 50 odd percent, my position, and that would freak a lot of people out. And my position is just I'm just going to hold. I'm just going to hold it because I believe it's still great companies. It could take a while, yeah. It could take 6 months, another 12 months before things pick up. There's a lot of fear in the market, a lot of these different things going on. And I believe all these different things, like the delisting, will all get straightened out. And just recently, in the last week, there's been some signs, some shoots of the China market beginning to recover. Possibly as it hit the rock bottom and now it's starting to go back up. We don't know. It's you can never tell. I mean, I've talked about Chinese stocks in the past, and it's been when I said it looks like it's the bottom, it's gone down again. So who knows? But for me, and this is what I'm doing, I'm holding my positions, holding my stocks, and yeah, and that's what I'm doing. You need to look at your situation if you're holding Alibaba, Tencent, JD.com, or Chinese stocks, and look at them individually in your own opinion and do your own valuation and do your own research and decide what's best for you. It probably wouldn't be a great idea to sell a lot of these stocks now because they are so low and so cheap. So again, that's why I'm holding. And I'd like to say you could buy some stocks, but I wouldn't go too crazy with it. And just try and keep your China stocks to maybe small portion of your portfolio, say 10%, would be quite a recommended sort of area to use. Okay, so I hope you found this useful, and I hope you've got some out of it. This, like I say, this is my own personal opinion, and hope to catch you soon. And remember to subscribe. Okay, take care.